I think it's important. We need to, in order for me to give you the perspective of where we're at today, I think I need to go back to a month ago, right? So the last time, today we ended up getting the economic data numbers. We got unemployment numbers and we got the jobless numbers, right? The jobless numbers are how many jobs were created in the last month, right? That's an important number. Now think about it. There's job creation, then there's jobless claims. There's a lot of different numbers around the labor market that gives us a sense of labor market, gives us a sense of inflation, gives us a sense of the health of the consumer. It's important for us to analyze what today's numbers mean much easier if we are able to go back to a month. Every Friday, I've been talking about what happened a month ago, but I'm going to go give you a little bit of a closer look on it, because in order to understand today what's happening in the market today, we need to go back to a month ago. The last time we got these numbers was August 5th. And you all remember, if you guys are with me on Fridays, you know that August 5th was what I call the perfect storm, right? A month ago, we came into the market on that Wednesday. The Wednesday before the jobless numbers came out, we had a very anemic Federal Reserve meeting. What do I mean by that? I mean that the Federal Reserve came on Wednesday. All eyes were on Jay Powell and what kind of clarity that he was going to give us about this interest rate cut, which they've been dangling in front of us for months and months, and probably almost now for a year. So all eyes were on that Jay Powell.
We are losing your video there. The camera chip, yeah, on it.
Okay. All eyes were on that meeting on Wednesday. And what ended up happening was we didn't get any clarity from that meeting. It was an anemic meeting at best. The Federal Reserve did not give us any clarity on that day. So that was Wednesday. So we came away from that meeting on Wednesday really kind of disappointed. A lot of expectations leading into it and not a lot of results. Then we come in on Thursday morning and we end up having a jobless number that came out. We were looking for 177,000 jobs created, and we only ended up getting 114,000 jobs created. Well, that was really, really dissatisfying. And everybody really came away from that really disappointed, as well as a lot of revisions of the meetings that had happened a month prior. So that really left everybody with a really bad taste in their mouth. Then we came in on Friday. Once again, we had, like we did today, the unemployment rate had bipped up from 4.2 up to 4.3. A bad meeting Wednesday, bad economic labor numbers on Thursday, unemployment rate beeping up on Friday, coming into a weekend where we had the escalation of the war between Iran and Israel. We had the Japanese stock market, the Bank of Japan raising interest rates, the carry trade, everyone unwinding the carry trade. Okay. And then we had the VIX bopping up from 20 to 60, the fear index. Everybody had this perfect storm. Everything leading into that weekend, right? And the carry trade and then we had the Japanese stock market crashing, down 12%, the biggest sell-off since 1987. This was all spurned and catalyzed by this economic data that we had happen today, right? Is a significant number. It is something that really is meaningful to show the state of the consumer, the state of the economy, the state of inflation. And it is one of those major components that will affect the Federal Reserve and their decision-making around interest rates.
Interest rates, yeah.
That was a month ago. We came in on Monday. Market sold off 256 handles, right? And it did not stay that way. We ended up clawing back, and we had 2 beautiful weeks where the market kept going up day after day, week after week. That was the beginning. That was the first half of August, right? So it was a perfect storm. It was an overreaction, and then it was a clawback with a lot of positivity that came into the market in the 2 weeks prior to that. Then we had 2 weeks of complete fragile markets, right? We had other economic data that comes in the middle of the month that was very disappointing. And there was a lot of economic data that was really dissatisfying to the market. We had a little bit of a technical overbought situation. We had a lot of other stuff going on, and we basically started having this complete reversal of tech, of the Magnificent Seven, of the market in general, right?
Mhm.
Because people were still, it was up until that mid-month meeting of the Fed where we got that clarity, where the mid-month meeting was at Jackson Hole, where we finally got the information we needed from Jay Powell, giving us clarity about the Fed cut. My gut is it was a little bit too late, right? I think we missed the opportunity. And I say that in retrospect because I'm looking at what's happening today. What ends up happening is we do get clarity about the Fed cut a little bit too late. By then, the market was already fragile, already rotational. We started seeing money come out of tech, going into some other places. And the last 2 weeks of August were really kind of shitty, excuse my language, but they were bad. I mean, they were fragile. They were fractionalized at best. And we saw the market come in 10%, and a lot of the tech sector came in 10% off its highs. Then we come into September. September has a month that's got a lot around it as far as seasonality goes. Okay, it tends to be a weaker month. And I know last week I said, well, I don't think there's going to be an effect on the volatility relative to seasonality. But I thought that the market was still had a lot of strength in it. I think I may be wrong. I think that the market has got a lot more selling left in it, but I'm not clear yet. I'm trying to figure it out. But what ends up happening is we come into the beginning of September. If you guys analyze, if you look, and there are a lot of graphs out there, and it's fascinating to read, okay, that in years where the market has been bullish, net, month after month, even those years, September tends to be the weakest of the months, okay? Whether it's around the Jewish holidays, whether it's around the seasonality of September in general, coming out of the winter, September tends to be the weakest. Not the less busy, not the least volatile, just a month that is a weaker net overall marketplace. So I think we're starting to see that already here. So we come in, we're in the first week of September, and the market is still really reeling off of a Federal Reserve that has missed the opportunity. I think they waited way too long to give the market what they wanted. So what it feels like they're doing now is playing catch up. Today, we came in, all eyes were on the market to see what the labor numbers were. We were looking for 160,000 jobs created, non-payroll. We ended up getting 140,000. That's not bad. That's actually a pretty good number because there was fear in the market that we were going to have it as low as 100,000 even. So 140 versus 160 was not a bad number. Then we had unemployment go from 4.3 to 4.2.
That was estimated as well.
What's that?
That was estimated as well.
That was estimated. We were looking for 4.2.
Yeah.
We at 4.3. So we did get what we were anticipating. And it was a tick down from last month. Those are both good things. So we had reasonably good numbers. We had good unemployment numbers. And so net this morning, I think that I was impressed with the results of the numbers that came out. And I think the initial response of the market was a favorable one. But what ends up happening is once the market starts to digest the information, the Federal Reserve started to revise all of the numbers from the last 4 months. And every month that they revised, it was getting worse and worse. One was 190 down to 110. One was 180 to 120. I mean, they completely, I don't know why they even do that, right? If you're going to come out with a number, wait until you have the right number. But to give you a number and then revise it negatively, it makes no sense at all. All it does is it gives people a complete lack of confidence in the marketplace altogether. And that's what we're seeing. So what ends up happening is we come into today and those are the numbers. But the fact that they were revising all those numbers in a negative way, okay, was just completely disappointing. It made no sense to me. And what ends up happening is the market starts to lose confidence, right? And that's what we're seeing right now. Okay, you revise numbers down worse and worse every single time. The market is going to get fragile. It's going to lose confidence. And that's what we're seeing now. I think then you had one of the Federal Reserve guys come out today and said, we are clear sailing for a Fed cut in September. The probability is 59% for a 25 basis point cut. It is 39% for a 50 basis point cut. Okay. But the fact when he said it, the way he said it, it looks like the Federal Reserve is backpedaling, right? They're backpedaling and they're not giving clarity to everything. And the market is so hell bent on getting some kind of clarity and some that it just looks bad. And the market is responding accordingly. So you started to see the market sell off relative to the revised numbers. Then the Fed came out and said something. And so you're just in a situation that looks terrible. And so the market is responding accordingly. Look, it's also a Friday. It's a Friday at the end of the summer, right? The market is not. So in my opinion, I think, look, I'm not clear whether the market is done selling what's happening here. Okay. I think we still maybe have some selling left. I think there's disappointment. The fact is the Federal Reserve waited too long. And so it looks like they're backpedaling here. Okay. And they look like they don't know what they're doing. And that is problematic. And that's what how the market is responding. Okay. So at the end of the day, look, this could all be over after today. We could see the market respond favorably in the end of the afternoon. I'm seeing a lot of buy interest in the market overall over the last number of days. We've seen huge volume come into the market on the buy side and the sell side. Okay. So there's a lot of interest. We also, what we learned from last month's sell-off is that down another 5 to 7% from where we are now, there's huge buyers. Okay. That's what we call the bid in the market. At the end of the day, what we learned from the major sell-off we saw last month was that when we opened down 256 points that Monday on August 5th, we didn't open down and go lower. We opened down and we were able to recoup half of our losses. That means that there was sizable buy interest in the market at that level. So that gives me some level of confidence, okay, that there is a sizable buy interest in the marketplace for sure. But anyway, what ends up happening is if there's no clarity from the Federal Reserve and the people and the investment community feels that the Federal Reserve is flip-flopping and they're getting bullied and they're not clear about what they're doing and they had a missed opportunity, like I think is it's unfolding. Look, this is an ever-evolving story, okay? We don't really know. The Federal Reserve is still in uncharted territory. They've never gone through COVID. They've never gone through 18 consecutive interest rate raises. They've never gone through the economic data and the situation we're going through. We do have, look, there's a lot going on around the election. And I know I say it over and over again, elections have very little effect on the market. But when everything is together, put into a big pot, and you get this big stew, you have the elections, you have this the lack of clarity around Federal Reserve and cutting interest rates. You have the seasonality of September. You've got so much going on. And you also think about it too. Think about where the market came from, right? This is not a very forgiving market. The way the market went up is going to be the way the market sells off. And we saw the market go. If you think about it, February of 2023, NVIDIA was at 108. February of 2024, NVIDIA was at 900. It went to 1,200. Think about that. That is 1,000% more than rally. So you have to realize so many people got in. We don't know where everybody got into the whole tech sector. We know AI is here to stay. We know that the overall story has not really changed. Okay. But markets go up, markets go down. We have not seen really, besides April, where we saw a pullback, a little bit of July, we saw a little bit of a pullback. For the most part, taking into account all the potential anxiety around the things happening in the world right now and the market, I think the market's doing pretty darn good. We are still at 41,000 on the Dow. We are still at 5,600 on the S&P. So if you think that, when a market is up the way this is and it pulls back, look, that's what markets do, right? Whether this is profit taking, whether this is a lack of confidence around the market going forward, I don't see. My gut is, look, I think I got caught a little bit off guard because I felt that the bulls were still in charge. I think we're going to see a little bit of a pullback here for a couple of days. It's been going on for 2 weeks right now. you know what? Look, is it the end of the world? Absolutely not. That's what markets do. I think what people, you all, as traders and investors, need to do when these situations happen is put together a shopping list. If you think about it, if I were to call you 3 weeks ago and say, what are you interested in buying? Are you interested in putting some AI in your portfolio, some of the tech, consumer staples? You would say, you know what? It's a little bit expensive. These stocks are up 10, 20, 30% for the year. I don't know if I want to pay these prices. And you and I say, that makes sense. Now, these stocks have been on sale for 2 weeks, right? They are suddenly affordable, right? They are an opportunity. So when markets pull back this way, people should be doing their homework. People should have a shopping list. They should look for the companies where they like the product, the people, the process, the profitability. Do your homework and look at those stocks, and that those stocks that were expensive 3 weeks ago are a little bit cheaper now. What does that mean? That means there's nothing fundamentally has changed in the whole world or in the whole economy, except a couple of numbers and a couple of revisions. If you think about it, 3 weeks ago, the stock market was trading at record highs across the board, right?
Yeah.
Has anything majorly, significantly changed overall? No. Yes, some numbers did change. Yes, there were some revisions. Yes, there's a little more anxiety around the marketplace. Markets get anxious when they trade at high levels of valuation for long periods of time. We have been in a bullish market phase now for a number of years. I mean, think about it. 2020, we were up 28%. 2021, 21%. 22 was a pullback year. That was the COVID year. That was the inflation year. 2023, up double digits. 2024, we had a great year. First quarter, best quarter since 2019. Or April was a pullback month. That's legitimate. The market's been on a bullish tear for a long time. Then we had a May, a June that were super solid against all odds. July, a little bit of a pullback because of the lack of clarity about this interest rate story. That's why I keep harping on the fact that I think they should have pulled the trigger on this interest rate thing a while ago. At least a couple of cycles ago. My gut is if they had pulled the trigger on this a couple of Wednesdays ago and already had given the market, you cannot give a market, right, that's trading at crazy valuations, right, a promise of an interest rate cut after 2 years of 18 interest rate raises, super high inflation, all that kind of stuff, and then not give the market what they want. You just can't do that. So we end up having a market that's distressed, a market that's starting to lose confidence, a market that's disappointed. As I've said to you before, it's like unrequited love, right? You cannot promise somebody the birds and the bees and the trees and then not give it to them. So yes, I know we're getting the cut we're looking for in September. Is it a day late, $1 short? I kind of think it is, right? That's my gut. So I think net, looking back, the way the market is starting to fracture a little bit here to look, one day does not make a market. 1 week does not make a market. If the market were to have a whole month, the month of September, where we pull back 10%, it's okay. It's not. It's healthy for markets. Technical analysis is an extraordinary art of using charts, right, to analyze stocks, okay, and to analyze and learn how to trade stocks. It's super important. We have a trade called the trend trade. A trend trade is where you take the moving averages. If a stock is going up in one direction on the way up or on the way down, and it pulls back to its moving averages. If the market is trending up, right, you have the moving averages are what designate support and resistance in the stock market in the charts. Okay, use the 9, the 15, the 30, the 65, and the 200-day moving averages. That's what people use to trade stocks using technical analysis. In a trend trade, when the market is heading up, right, you don't just buy the stock, because you don't just buy a stock or an indices or an instrument, whether they're trading the futures or an individual stock or the SPY, the spiders. You wait until the chart pulls back to support, which gives you the confirmation that it's going higher. It's the same thing with overall markets. We like the markets that just continue to go up, 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 and never pull back tend to be a little bit overinflated, a little bit frothy, and sometimes they feel a little bubbly, right? There's no support. If you're buying into a stock or a market or an indices that goes up and pulls back, goes up and pulls back, it's building a foundation for a stronger bullish market. And that's what represents strength in a market. Markets trade off of support and resistance. Charts are the way to do it. We use technical analysis. You guys, if you're building a portfolio, and I wish you all the best, you're on a great platform with TradeZero. Building a portfolio long-term, technical analysis can be super helpful in getting you the best entry point into the market. But as far as any of you are day trading the market, technical analysis is pivotal. It's key. It's the only way to trade this market. I've been trading the markets for a long time. You guys know that. And technical analysis is the greatest indicator and helpful hint in day trading this market. Fundamentals are not a great skill to use when day trading a market, right? Day trading, by definition, is trading the market small, making bits of money so that you're green at the end of the day, the week, the month, right? It's not investing. But investing long-term, you all should have a shopping list. Back the way this one is, find the companies that you loved 3 weeks ago that are trading at a discount, and now you start buying those. If you're day trading the market, check out technical analysis. It's a great way. Use risk management, get the mindset, the psychology behind it, and that's it. So net, overall, we are in the first week of September. The market is going through a little bit of growing pain. It is the end of the summer. I don't think people should be scared off by a little bit of a pullback. Peter, all your videos are amazing. Thank you, Vashko. I really appreciate it. Everyone should not be freaking out. Net over time, markets go up. This is nothing more than an opportunity to sit back. The companies you loved 3 weeks ago, the market you loved 3 weeks ago, which is trading at record highs, is just going through a little bit of growing pains. Look at this as an opportunity to get into stocks that were too expensive 3 weeks ago. Everybody building a long-term portfolio, realize your first entry into a long-term investment should be your smallest. What do I mean by that? If your plan is to buy 100 shares of NVIDIA, right, you should start by the smallest amount. You just don't go out and buy 100 shares. You buy 25 shares, right? You buy the small, then you buy 35 shares, and then you buy 45 shares. You start to build a portfolio slowly, but your first entry should be your smallest amount, and then grow. If the stock continues to get cheaper, then you average in and you buy more. If it goes up, well, then you're chasing profitability, and it's all a good thing. Anyway, I think we're done for today. I appreciate all of you. I would beg everyone to just be calm, not the end of the world. Look at this as an opportunity. Historically, every look, this is not a crash. This is not even a major sell-off. This is a little bit of a pullback. In a market that's been going up for 2.5 years, you have a couple of days where the market goes down 600-700 points. It's not the end of the world. This is nothing more than an opportunity to build yourself a beautiful portfolio. There's no better time than right now to make a market. So anyway, I appreciate the day.
Thank you so much for that, Peter. I also would like to ask you about the role of the retail investors in terms of the market volatility. As we experienced in recent years, the rate of retail investors in the market is increasing. So do you think that's causing more volatile market, more dynamic market for us? No?
You know what? Maybe it is. I don't know. I mean, look, the retail investors are a big, important part of this market for sure. And I think, are they causing the volatility? I don't think so. Maybe a little bit. But you know what? Look, you're seeing the big players, the ones who are in and out of stocks quickly in a big way. I think those are the guys who are the major players.